BillionToOne is rapidly emerging as a massive disruptor in the precision medicine space. We're looking at a company that is entirely rewriting the rules of molecular diagnostics. Okay, let's dive into this. BillionToOne operates right at the complex, fascinating intersection of molecular biology and computational data analysis. Their entire business model, the whole foundation of their competitive edge, is built on their proprietary quantitative counting template, or QCT for short. This technology allows them to do something that is incredibly difficult. They can actually count DNA molecules at a single molecule resolution. By quantifying biology with this level of extreme, pinpoint precision, they're producing highly accurate molecular diagnostics that the legacy systems out there simply cannot match. To truly understand their economic moat, you really have to compare them to those legacy players. Traditional sequencing technologies are generally limited to detecting large chromosomal abnormalities. It's a bit like looking at the forest, but missing the trees. But BillionToOne's QCT technology, it can detect single gene disorders directly from maternal blood with absolutely unparalleled accuracy. Their flagship prenatal tests, UnityScreen, and the newly launched UnityConfirm leverage this exact capability. And here's the kicker. When healthcare providers, like your major hospitals, OBGYN clinics, and oncology centers, experience this level of single-molecule precision, they just don't go back. This technological edge creates incredibly high switching costs, effectively locking in their customer base for the long haul. Funneling out to the macro level for a second, this is the immense opportunity we are talking about: $30 billion. Let that sink in. That is the estimated global total addressable market for comprehensive non-invasive prenatal testing, or NIPT, combined with liquid biopsy oncology testing. This isn't just some tiny niche market. We are talking about a massive, rapidly expanding universe of demand for precision medicine. And that $30 billion market is being accelerated by some very powerful secular growth drivers right now. We're seeing a widespread global increase in the adoption of NIPT alongside a massive surge in targeted oncology therapies that strictly require precise liquid biopsies. To put it in perspective, the broader molecular diagnostics industry is projected to grow at a compound annual growth rate of 10 to 12%. But BillionToOne isn't just passively riding the wave here. They are aggressively capturing market share from legacy competitors like Natera, Invitae, Exact Sciences, and Guardant Health. And they're doing it specifically because of that single molecule counting precision we just discussed. Now, what's really interesting about this performance is how that technological superiority translates directly into hard financials. Look at these explosive Q1 2026 metrics. The company reported $108.4 million in revenue. But more importantly, look at that net income line. They generated $18 million in positive net income, entirely reversing a $4 million loss from the exact same quarter the previous year. They also posted a significant earnings per share beat of 34 cents. For anyone watching this explainer, you know this marks a remarkably rapid and successful pivot from the typical cash burn phase of young biotechs straight into solid GAAP profitability. That phenomenal transition is being fueled by a blistering 84% year-over-year revenue surge. And this wasn't just some organic drift. This was a direct result of the highly successful launch of their UnityConfirm product in Q1 2026, which drove 72% growth in the prenatal segment alone. Even more staggering, their oncology segment didn't just grow, it literally multiplied by 5 times year over year. And they are delivering this kind of hypergrowth with a 73% gross margin, up 450 basis points. If you're a growth-oriented investor, seeing software-like gross margins in a biotech company is practically the holy grail. It absolutely proves the immense scalability of their automated lab processes. Because as their revenue scales over fixed laboratory costs, their operating margins are rapidly improving, which points to a highly lucrative, sustainable long-term business model. This operational leverage led to $17.8 million in operating income in Q1 2026. Hitting positive free cash flow is a monumental milestone for any newly public company. It fundamentally de-risks the investment because it completely eliminates the immediate need for dilutive equity raises just to keep the lights on. They are now officially funding their own rapid expansion. Combine that newly minted cash flow with a pristine balance sheet. BillionToOne raised $314 million during its November 2025 IPO, and right before that, they secured $140 million in non-dilutive credit. So they're sitting on a massive liquidity cushion. The debt they do have is structured as long-term credit facilities with very manageable interest rates, which their current cash flow easily services. This cash position insulates the company against potential macroeconomic recessions and provides ample dry powder for strategic laboratory capacity expansions whenever they need it. Of course, flawless execution and strong financials do come at a price, which brings us to valuation. Based on recent quarters, BLN is trading a forward price-to-earnings multiple of roughly 75x, assuming an annualized EPS of $1.20 to $1.30. At face value, I know, a 75 multiple looks like a pretty steep premium. So, the crucial point is how you contextualize that premium. When you factor in their explosive top-line revenue growth of over 80%, you get a price-earnings-to-growth or PEG ratio of approximately 1.97. When you look at it in the context of a high-growth precision medicine compounder that has expanding margins and a deep technological moat, this multiple is entirely justifiable. Yes, they traded a premium to the broader healthcare sector, but they align perfectly with high-growth peers like Natera. And Wall Street clearly agrees with that justification. With the stock currently trading around $92, the 12-month analyst consensus price target averages between $122 and $125. This implies a really solid 35% upside from current levels, with major firms like BTIG and JP Morgan firmly maintaining a buy rating on the stock. Looking at the technical setup for a moment, BillionToOne has been in a structural uptrend since its $60 IPO. It recently hit a 52-week high of $150.44 before entering a healthy consolidation phase. Right now, there is a major historical support zone firmly established right between $85 and $90. With the weekly RSI cooling off from overbought territory, the current level presents a highly attractive accumulation setup for anyone looking to initiate or add to a position. And you won't be buying alone either. Institutional backing is overwhelmingly strong here, signaling serious smart money confidence. Total institutional ownership sits at nearly 72%. You've got Hummingbird Ventures holding over 17%, Libertas Capital holding almost 8%, and passive ETF inclusions providing a steady, continuous bid under the stock. And this brilliantly illustrates the massive untapped opportunities still ahead that could drive the stock toward its aggressive bull case targets of $150 or more. The runway for growth absolutely does not end here. Management, which by the way recently appointed a veteran oncology chief medical officer, is aggressively expanding into minimal residual disease testing, which is a massive untapped market. Beyond that, they have the clear potential to license their QCT platform directly to pharma companies for clinical trial patient selection. Add in the scaling of testing availability to the huge patient pools in Europe and Asia, and you can see why the long-term outlook is so exceptional. However, an objective analysis must acknowledge the downside risks. At roughly 17 times trailing sales, the stock is frankly priced for perfection. Any slight earnings miss or guidance revision could easily trigger severe multiple contraction. There is also heavy regulatory and reimbursement risk to keep in mind. Any reduction in rates from Medicare or private insurers would immediately compress those beautiful 73% margins. They are fighting some very well-capitalized peers in the oncology space. Additionally, recent SEC form filings do show some insider selling, including the SVP of Sales offloading $1.82 million in stock in July 2026. While that is pretty common post-IPO, it is definitely a metric to monitor carefully. So, factoring in both the massive upside and the inherent high beta volatility of the diagnostic sector, the recommended investment strategy here is to accumulate on dips. The $85 to $92 zone offers an excellent risk-reward entry point. This should probably be treated as a high-growth mid-cap satellite position appropriately sized at maybe 2 to 4% of a total portfolio. Because of the sector's general volatility, using a dollar-cost averaging method is highly recommended to mitigate the risk of sudden valuation-driven drawdowns, aiming for a base target of $125 and a long-term aggressive target of $160 plus. BillionToOne has clearly proven its technological moat, achieved early profitability, and delivered over 80% top-line growth. It is an absolute standout compounder in precision medicine. But with a flawless post-IPO run leading to a stock that is undeniably priced for perfection, the final question remains for you to answer. Factoring in the volatility and that premium multiple, are you ready to count on BillionToOne in your own portfolio?